Oppenheimer Asset Management Chief Investment Strategist John Stoltzfus has an S&P target of 5,900, and there he is, smiling as always. Your latest report was titled, "What a Difference a Rate Cut Makes." So, John, why and how big a difference?
Well, David, great to be on the show. I think the thing that makes it really a big difference is that it actually happened. I mean, we had 11 rate hikes. We had 9 pauses, 20 FOMC meetings in a Fed funds hike cycle. And this is a down payment. We see it by the Fed for Wall Street and for Main Street. And by down payment, sort of a good faith deposit on the thought that indeed the Fed is getting ready to cut rates further as needed and if needed. And I think the market has reflected that over the course of the last week since the announcement of the rate cut. The fact that it's been a bit muddled, so we see days when defensives do better and those stocks that haven't outperformed, and then we go back to see the tech lead and the semis heating up and hitting a 41st record high for the year for the S&P 500. Just in this type of based on where we've come from, not surprising, and based on what you all were just saying related to the consumer has shown remarkable resilience, and so have earnings in terms of corporations based on the second quarter earnings that just ended a few weeks ago.
So does that make consumer discretionary stocks appealing? Because it hasn't been all that great. I mean, the sector's okay, but it has Tesla in it. But would you want to be exposed to discretionary stocks going into holiday?
It's one of our favorite sectors, Sarah, and we've had it for this year. It certainly has underperformed, but performance has improved decidedly over the course of the last few months. And I think that's as investors recognize the fact that the consumer has indeed been resilient. It is within consumer discretionary. It's going to be select names, so it's not a broad type of rally within consumer discretionary that would all boats would float. But the better retailers, whether it's using the internet for sales, e-commerce, or a combination of bricks and clicks, that seems to be the way to go. And we'd say it's management that you really want to look at in terms of the availability for a company to move through transition period, which is never easy, and do it successfully.
But I also mentioned discounts, which is one of the reasons Adobe is so optimistic on the forecast. I think they see 30% discounts in categories like electronics. Yep. So do you worry about margin pressure, especially when the word du jour is value?
But, I think without a doubt that the word du jour is value, and we've even seen it within the services that consumers are buying versus goods. But I think it's part and parcel of the process of seeing an increase in competition, which gives the consumer room to buy, and it's a necessary movement here. In terms of how much margin pressure, I really think it depends on the buying power of the particular retailer, but also keep in mind that within consumer discretionary, there's a lot of other businesses other than retail merchants that provide experiences and things where the margins are likely to be well preserved.